Hello traders, Gary Wagner here. It is 12:06 in Honolulu and 6:06 in New York on Thursday, 25th day of August, 2022, and this is the Daily Report for gold and silver. Gold had a respectable gain today, with the most active December contract currently fixed at $1,771.80 after factoring in today's gain of $10.30 or 0.58%. Today's rise was a combination of dollar weakness and buyers entering the market, but it was predominantly buyers that resulted in today's $10 gain. Because when we look at the dollar index, that had a decline today, but only by 0.19%, and gold gained 0.58%. Silver had a very nice gain of just over 1.18%. It is currently fixed at $19.30, and that is after factoring in today's gain of approximately 22 cents. This has been a most interesting week in the financial markets, and to top that off, the Jackson Hole Economic Symposium began today, which will be capped off tomorrow with Chairman Powell's keynote speech. We are looking at a 2-month candlestick chart, and the single candlestick can be identified as one of the umbrella group of candles, this called a hammer. We have just put up a picture and the definition of a hammer on the screen. Also, we sent out a trade alert this morning to raise our stops. In the case of our long December gold contract, we went long at 1747. We have now moved our stop up to 1759. In essence, locking in a little bit of profit. Our Forex traders moved their stop up to 1744. And those who are actively trading GLD have raised their stops to 162. We're looking at a daily candlestick chart of the continuous contract of gold futures. For the last 3 consecutive days, we have had green candles with a higher high and a higher low. This small red candle here represents the open overseas in Australia. In terms of what we're looking at, we moved our stop up to, as I said, to 1759. We're in at 47, so we've locked in some profits. I believe that our next level that we want to see taken out and taken out effectively is the 50-day moving average. That occurs at 1773. Of course, the wild card will be the demeanor and content of Chairman Powell's keynote speech tomorrow. But if we see gold continue to move in our anticipated and desired direction, which is to higher pricing, I believe that the real level of resistance that we will first encounter will come in at around 1790, with our end game and exit strategy to be able to get out somewhere above $1,820. That is the top of this most recent leg of the former rally before we had a correction. However, traders, what we have been looking at is a very short-term assessment. The key to this next trade and how gold moves over the next couple of months is if we take out the brass ring, which comes in at around 1880, because we have had consistently a series of lower highs as well as a series of lower lows. And that, of course, is the definition of a bear market. For us to be able to say with confidence that we have pivoted from market sentiment that's extremely bearish to bullish market sentiment, we have to get a higher high than the previous high, not another lower high as we did here in 1824. So although I believe that on this leg of the rally, we should be able to see gold prices move as high as about 1825. We might get some sort of pullback there, but really what we're looking to see is whether or not gold over the next couple of months can trade to a higher high, which would mean that gold would trade above $1,880. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review after Chairman Powell addresses the Jackson Hole Symposium. Have a great day. Bye-bye.